Hi there, keen traders. It is Yen Talk, and we're going to go through the setups that we have in the yen pairs heading into next week. There should be a lot of nice price action, and we have a lot of great setups heading in for the new week, so we could hopefully take quite a few pips out of the market. The interesting thing we have to keep in track is the FOMC meeting, where they introduce a new bond purchase program, where they buy the FOMC will buy $40 billion worth of mortgage-backed securities indefinitely until they believe that the market has found the economy has found better footing, and they didn't give clear parameters until the exit of the program. So basically, we have quantitative easing indefinitely into the future. It could go on to 2060. And what this is going to do is it's going to kind of manipulate the markets in a way where every time there's strong data comes out against for the U.S. economy, it'll actually could make the markets go down because it could indicate the end of quantitative easing. Now, and if we have bad data, it could make the market actually rise because people would expect that the Fed will continue to pump up the market. Now, this will have the same effect on the dollar, where when we have bad data, it could cost the dollar to the dollar to rally. And when we have good data, it will actually cost the dollar to fall. It's counterintuitive, but it will be interesting trading. What we're going to watch here, though, for the setups, the most interesting setups aren't in the USDJPY just because there's too much counterparty risk, but we can just look that the pair is trying to break above the resistance level at 78.20, and if it finishes the day at that level, it would be nice. It would be nice because it puts the pair back into the range, basically where it started the week, and we could see bouncing around starting next week up towards the 78, the 80 level or the 79.62 level, and just get bouncing around. But that's not the setups we're going to look at. First, we're going to take a look at the more intriguing setups. First one being the EURGBP, which shot right up to the 50 fib, and then it's found some traction and has moved back. It's found some resistance at the 50 fib at 102.76, and now the pair has stopped there. And what I would look for in this pair is for any move back down. Any move down towards the 101.48 level would definitely be a good area for buyers to re-enter the market for a push higher. And you could play rejection right here, right now in the market, but I would wait until Monday and that to go short that cross because you want to see the price action over the weekend. Looking for a push down towards 101.40. The Great Britain pound cross, as you can see, clearly broke above the trend line that has carried the pair lower over the last few months, and this clear break above the trend line at 125.25 looks like it's trying to move up towards the 0.618 fib at 127.85. Any move up to that area, though, could find sellers in the short term because the move may be a little bit overdone. But any move down towards the 50 fib at 126.12 could find buyers. I would expect the pair to ricochet off these fib levels after such a big move to start the week out. So I'm looking for a pullback to the 50 fib or a move up to the 0.618 fib to try to enter any trades. The AUDJPY, as you can see, has an intriguing setup because it moved right up to the descending trend line that has capped the price action over the last few months. This level currently comes in around 82.73. Any move we could see a bounce lower towards the 82.20 or ultimately down to 80.70 for a bounce higher, but I would be interested in buying any bounce back higher for another test of the trend line. And if we do break above the trend line, the first target, of course, would be up to the 85 level. The New Zealand JPY also is another intriguing setup because it definitely broke through the resistance zone that has capped the price action between 64 and 64.40. Right now, the pair is sitting right about mid-range, so there's not a trade to be done here and now. But if we get a bounce back down towards the 64.40 level, it could be a good opportunity to buy, looking for a bounce back up to 65.50, or any move up to 65.50 could create a short opportunity for where the pair would bounce back a bit, trying to gain momentum for a push back up higher. The ICATJPY is interesting because it's still playing the fib game, and it looks like it wants to continue. You can see that the 50 fib is capped the price action to the downside at 79.67, and all the moves higher have hit the 0.618 fib, which is basically at 81, coming at 80.92. These levels I think will probably actually hold in the midterm. So I would look for a ricocheting between the 0.618 fib, and maybe if we break that down towards the 0.38 fib at 78.42, I expect the game to continue between these levels, and in the short term, just play the range until the range proves you wrong. That's what you have to do. All right, everybody, this has been Yen Talk. Have a great weekend, and I'm looking forward to making some pips next week.